Hey, greetings, everybody. By the time you're getting this on the East Coast, it's probably going to be the 13th. So I think I'm just going to leave that as it is. This is Jeffrey Scott, and this is my top-down review for June 13th, 2021. Any comments, please direct them either to the under the remarks section if you're watching this on YouTube, or feel free to email me at hgsidoc@gmail.com. Of note, I'm on the road, so the resolution today is a little bit lower than normal. I think it's 2560 by 1440, 2K instead of 4K. Probably be easier to see for some of you. I titled today, Markets Rise with Risk Appetite. Interesting week. If somebody had told me that we would have an upside surprise in the CPI and rates would fall, I think I was living in the land of Goldilocks. Oops, I think we are. Where the Fed keeps talking down rates, the rates fall. Interesting week. Risk is back on, at least it was on Friday. As always, this is for education purposes only. Anything recommended in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I'm not affiliated with any software vendor or trading company. I pay for the tools that I use. Trading involves risk, and you and your loan are solely responsible for any investment decisions you make. I'm actually in Vegas, where I went to another Roy Kelly seminar. Pretty simple approach to trading, makes a lot of sense. And I go because even though I read his books and I use his tools regularly, every time I sit through and listen, I learn something new. In fact, when I advertise it to him, he might get mad at me. I multitask. So I flick through charts and I listen to him. And again, every time I do that, I come up with some ideas that can improve my trading. I also this week did an accelerated Wavy Tunnel Pro course by Jody Samuels. I never really looked at her stuff because her email address has FX in it. Since I don't do Forex and I'm not really that much into futures except for market timing, I didn't think I could learn anything. Boy, I was wrong. What a great approach to teaching. And I think the important thing here is that, here I am. I think I'm a successful trader. If you're listening to this, you're either listening to laugh at it or maybe you agree with me that I'm successful. And I'm still getting educated taking 2 courses in 1 week. Now, this was the first course on the road I've done. Jody's course was online. I'm thinking about doing a live educational program this fall down here in Florida. A lot of moving pieces, including COVID. I don't do them to make money. They require a lot of work, and I enjoy spending time with people down here. Doing it just online doesn't really make it for me. I miss the interaction. So that plus, God willing, I'll have a granddaughter by then, and who knows, maybe I'll have to be playing with my grandkid. But I do think that's possible. I'm going to talk with John Person and see what he's doing, if there's a chance to do something back to back. If you're interested, and it would probably be second week, first or second weekend in December, please let me know just so I could get an idea if there's any interest. Now, here on this sheet, as I've gone over before, some of the influences that I've used. Unfortunately, two of my greatest influences, Ian Woodward and George Lee, are no longer with us. And when I do education, when I think about trading, and when I give advice to new traders, is become your own guru. Learn from lots of smart people, and then adopt what makes sense to you, and come up with your own style of trading. I own a lot of software. I use TradeStation and thinkorswim predominantly during the day. I have lots of indicator sets, whether they're Q tools from Sagar on TradeStation, Dr. K's tools on TradeStation and thinkorswim, um, uh, Roy Kelly's tools, Trend Pro tools on multiple platforms. So I use a lot of different things. And then for analytics, I like using HGSI and EdgeRater. I'm independent. No one pays me for talking about them. I don't charge you except for live meetings. And those live meetings, if you've ever been to one, I'll feed you and give you enough alcohol that I'll lose money on them because I do it for fun. And this is just education. The website for HGSI, the software program, I'm affiliated, of course, is here, highgrowstock.com. I just point out the free 30-day trial. and that under investing strategies, you'll see hundreds of videos that I've done and others. Stock patterns are cyclical, and I always ask myself on these, and frankly on every stock and everything I do, is where are we? You certainly don't want to go long during stage 4. And you don't want to overtrade stage 1 and stage 3 because you'll get chopped up. We've been in a prolonged period of stage 3. It felt like we broke out this week. And the question will be, was that just a 1-week wonder, or is risk on and we go on to set more than nominal new highs? I think you can make arguments both ways, and there's a lot of looming divergences out there that would argue against it. But as even my neighbor has repeated back to me that she learned from somebody, trade the market you got, don't trade the market you think you should have. Based upon where we are, I take different approaches. Since I felt like a new leg up, I really reduced my hedging last week, added to my longs, and because of Biogen and Starbulk, the 2 stocks I talked about, had a really good week. If you look at how the week ended, I said it was a strong week, and what wasn't strong? It's pretty clear. Real estate was at best 50-50, probably underneath, as was healthcare. Although healthcare is divided. I said last weekend that I saw weakness in the payers, and that weakness persists. Industrials look super strong. Technology's strong. Financials were strong on Friday. Strange because of falling rates. So a lot of strength in the market Friday. Let's take a look in Thinkorswim at some of these charts. Now again, as I pointed out earlier, I am doing this on a travel computer, so it's not 4K, and I don't have an external mic, so God only knows how the sound is. If it's god awful, I'll either post it anyways or try and re-record it when I get home. So same old story. Market's in a powerful uptrend since the March 2020 lows. This is crap, I want these to be daily, so let me flip these back to daily. We'll look at weeklies, but I like to go in the order I always do, which is daily first. All right, pop this back up to maximize sell. Straight up, obviously not straight, but pretty straight up since this is going back a year. And, if I go further back, you'll see the dip in February and March. The thing that's bothered me, that I've been concerned about, is we've gone sideways on this retracement here, which is 161% retracement. And the funny thing is, this is one of the targets that Jody Samuels kept referring to as a likely place for rallies to go to. Doesn't mean it can't go up to 261 or beyond, but it's struggling here. And you could see it's gone sideways for most of April, May, and just now looks like it's taking off. The fact that we see a balloon here says we've got a new high. It was set on Thursday, and if I set my cursor correct, looks like that was also an all-time high, closing high on the S&P 500 futures. Pretty darn impressive. If I look at the NASDAQ futures, again, steady rise up, but not nearly of late the rise that we saw earlier off the bottom. In fact, this too has been going mostly sideways, where the vertical or horizontal line I'm forming here through the prior highs remains resistant. And frankly, is this a head and shoulders top? You can make lots of arguments, but this is really, like the S&P 500, has really been sideways now. And this one really is trading exactly the same range it did back in the beginning of February. If I look at the Dow futures have been strong up until this past week, when they actually pulled back and headed down towards their 50-day moving average. Certainly not broken. A new person sell signal is something new, and you can see last time that sell signal took it down quite a bit. If we look at the Russell futures, the Russell, did they break out last week? Well, we haven't gone out to new highs yet, and that's going to be my barometer, but the Russell had a nice move last week as well. If I look at The VIX is bouncing back down at the low of the year. So that should tell you something. If the market was getting ready to roll over, don't you think there'd be more VIX, a higher VIX? And then the dollar rallied into this week. And is this a bear flag in here? And are we going to break lower? I would put myself in the camp of I believe so. But again, I'll wait and see what it does. This is not helping things like gold. If we flip this now to the weekly chart, just look at it, you can really get a sense of where we are right up to that 161% retracement. We can go further, but this is a natural place that one might have expected this rally to peter out. And you could see the rallies off the bottom on the other major futures. But clearly, even with last week's rally, sort of a sideways move over the last several weeks. All right. Now we change this back to daily so I don't mess that up later. And let's look at the expected move charts. So if you remember, the expected move reflects the premium charged by a market maker if you buy a straddle at the money. The market makers are odds makers, and they're not really risk takers, they're risk managers. And that if they're selling you a put and a call at the strike price, they're guaranteed to win on one of those. And as long as the market does not move in one direction, the total of both options that they sell you, then they will make money on the trade. Now, I'm sure they're probably buying something to protect themselves for an outsized move, because again, they're more managers than they are risk takers. But it'd be interesting to see. But you can see here, this is the S&P 500. So the ranges that you see here, and I've questioned these wide ones the last couple of times. Now we're getting back to normal. This is the expected move. Now, perhaps this was super wide because we had CPI coming and there was fear about inflation. And this was kind of wide because we had employment numbers. But regardless of why, we have, look at this last week, Friday, Thursday, Wednesday, Tuesday, Monday. As Don Kaufman often says, massively unchanged on the week, actually up 0.5%, but really did not even come close to the bullish or bearish boundaries. If I look at the NASDAQ futures, interesting, strong week, traded right up to the positive bullish expected move and stopped. So if you look at what the expectation is this week is, look to me like they're expecting an up move, but you set the center here, and then this is a plus or minus based upon the at the money straddle. If we look at the Dow futures, the opposite of the NASDAQ, where they traded down all week and ended on the bearish side. The Russell had an outsized move and actually closed above the upper boundary. So 65, 75% of the time, you'd expect the stock to stay within those red and green. Often, what I look for is once they get above the line to come back in, and this one certainly did that, but had such a bullish day Friday, it closed a little bit outside. You look at the VIX, traded down to the lower line and stopped. And then you look at the dollar, traded up and did not make it to the upper line. So the only one that moved outside the lines was the Russell. The Russell had a really strong week. Rates falling. You can see both the 10-year and the 30-year coming down pretty hard, despite a strong inflation numbers. AD lines, this is a change. We've got new highs on the AD lines on the Russell and the Russell 1000. And the Russell 2000 is not yet at all-time highs, but is getting close. So there's a little divergence favoring the large caps. Now the NASDAQ, which was really divergent, setting a new high here on the AD line, but not at all on the index. You can see the Qs and the AD line are at all-time highs, not bearish looking. And then if you look at the NYSE, the only thing that turned down, I guess for a Dow theorist, who I'm not, transportations. You can see TLT bonds turned up with low rates. If we look at breadth, both stocks above the 200 and above the 40 turned up modestly. These are not troublesome levels. However, the 12-week new high, new low, it did turn down, but it's up in nosebleed territory. So a couple of strong days, 2 or 3 strong days, might get us to that rubber band time where you expect a pause. I didn't say on Monday. The daily McClellan, did it break above this downtrending line here on the oscillator? Is it going to get out of this long-term bearish divergence pattern? Not yet, but it'll be interesting to see. And you clearly see the new highs on the weekly and far from new highs on the McClellan oscillator and summation index. The buckets tell me that 2/3 of the stocks are above the midline of their Bollinger Band. I'm talking about stocks in the S&P 1500. But I see not very few, but not a predominant amount above the Bollinger Bands. There are quite a few up at the top. So again, extended a little, but not at a breaking point. Hindenburg Omen, you'd expect this to fire since we're at all-time highs before a major correction. We're at all-time highs or near all-time highs, and we have no evidence of a Hindenburg. Market tone, you could see predominantly green. The red is gone, so that's improved. If you look at, I call this markets in rotation. This is an interesting set of charts. So I used the data that was a week old, so data that was fresh on, say, the Saturday the 5th. And when I look at that data and I look at 1 day or 1 week gain versus ERG, EPS rank plus relative strength rank plus group rank, clearly this was not a growth week, which is kind of interesting because I made a lot of money. And the IBD 50, I believe, was up as well. The ETF for the IBD 50. The IBD 50 itself was actually down 0.2%. EPS rank was not a winner. Relative strength rank, you actually were best if you were off the bottom. And group rank, the crappier groups the week before led. So this is a sign of rotation. It's almost like the big cap tech return. When I looked at my holdings, I was up 2.4%, although it looks like 50-50. That's interesting. I had some big movers led by Biogen IDEC. My buy watch list was up only 0.36, which was the same as MarketSmith 250, the weekend review, trailing the S&P 500. My filter buys, although more were negative, they were up an average of 1.73%. Was this an easy week? No, it was not an easy week. And I guess evidence that this was a rotation was some of the stocks that I looked at as potential shorts were up. In fact, they were up 3.37%. So I don't short them necessarily. I don't short markets at all-time highs. I'd rather see a rollover and a retest. But it's, to me, as a signal of the strength of the market. Sector strength still mixed with red showing up here on staples and materials. If we look at Friday, all the sectors were up. 85% of the industries were positive and 75% of the stocks. Now, this is 1 month performance. This is 2-month or 2-week performance in 1 week. And clearly, these are the best numbers up here. So have we just had a reversal to the upside? Feels like it. We'll see how far it lasts. If I look at stocks real time on the buckets, I use this comes from Sagar, his wonderful tools, the Edge tool, and it gives me a clue intraday. Last week or a couple weeks ago, it was quite high, and I knew a reversal was imminent. Here's that 63% above the midline. If we look at the sectors on the week, although it was 11 and 0 on Friday, it was a mixed week, 6 and 5, which is weaker than it was 2 weeks ago or a month ago. If we look at what was leading, discretionary, industrials, and energy, and then what's bringing up the bottom, interestingly, real estate, which has just been so strong over the last couple of months, bottomed out on Friday, was the worst performer, as was healthcare. And I think healthcare, a lot's going to be payers, and part of it's probably the Biogen IDEC drug, more of that to follow. If we look at industry groups, um, I just took the groups in the top 3 sectors, I ranked them, and I said, all right, what are the stocks in these groups? These are ranked, the top groups. And these were some of the stocks in the top groups ranked by 1 day performance. And then I hit the 3 stars, and this gave me a list of undervalued stocks with growth. And I said, let's go take a look at these in TradeStation. Now, the one that I liked was Skechers. Pullback to support with a new person buy signal, and a go with flow signal on Sager stuff. What I don't like about this is it is getting close to resistance, but it's pulled back. My guess is it challenges this prior high. I look down here, these are from Vital. It's an extended list of stocks in the same peer group. All of them were up this week. The thing about Skechers is it's got some great short-term earnings, but it really laid a pooch the last year, so it's a turnaround play. Canaries in the coal mine. This is the stock list in the upper right-hand corner, and you can see, and obviously Priceline's called booking now. We are going sideways in a narrowing channel between the 50 and the 200-day moving average, squeezing, as you can see with the yellow sign, and also with a bullish convergence on relative strength. I put that together, and a breakout above the chandelier stop 50-day moving average in blue and the Wilder PSAR might lead to a challenge of new highs. Know your news and earnings. I think the thing we're going to be watching now is inflation. So we got a PPI at 830, business inventories, some home building permits, housing starts, import price index. We've got a Federal Reserve announcement on Wednesday, so that means it's a big deal. Of course, I would expect them at this point to not mention anything about the taper and to talk down inflation. And then on Thursday, we got some jobless claims, nothing on Friday. Looking at earnings, a quiet but not empty week, especially if you own things like Oracle, Lennar, Home Builder, Kroger, Smith & Wesson. Thoughts? Well, you can see here the S&P and NASDAQ and Dow were up a little bit on Friday. The S&P had a record closing high. Look at the Russell and look at the small cap ETF, IWC. They were the leaders. So risk is on. If you look for the week, the S&P was up about 0.5%, relatively tight week as I showed you. The NASDAQ and the Russell led. Dow Jones actually dropped nearly 1%. Now, last week I talked up the Biogen story, which was sort of stupid of me because I didn't realize they would shut it down during hours on Monday. But those of you who listened and agreed with me, or feared what the heck, he makes money, let's give it a try, had a happy day because it was up 39% for the week. It was up probably 47%, if I remember correctly, before it rolled over a little bit. I took profits right when it reopened. I also, as part of a Scott synthetic, I had sold at the money puts and bought protective puts, so I covered those for about 20 cents. I just wanted to have them out of my portfolio. It's not without fleas. The drug was turned down by a committee of experts, or recommended no. The FDA said yes, and my reasoning for being excited by it is because I've had a couple companies, and well, I've had a lot of healthcare companies, but I've had a couple that have been in cost containment where there's partnership between physicians and payers to appropriately use expensive therapies. And I got contacted in the last week by 2 national payers asking if there was a way to help them manage the use of this drug. So they're clearly nervous at $57,000 per patient without clear-cut endpoints. It's going to be expensive and will probably hurt the system. But why did I think it was going to get approved? Well, getting calls from the insurance companies was a tip-off. But I think the main reason was Sarepta. Sarepta had a drug for muscular dystrophy, Duchenne's muscular dystrophy, approved. It was one of the worst studies I've ever seen on a drug getting approved. The number of patients was like a handful, and it got turned down by the advisory committee, turned down by the FDA. And because of the activist community and the patients and their families, The FDA changed their mind. I don't think they had a stomach to turn this down. So congrats if you bought it. I don't guarantee where it goes from here. Russell's leading on the year, up 18%. I'm up considerably more than that. NASDAQ now off the map, but still lagging at 9.2%. Had another good week. If you look at ARK ETFs, perhaps that's another sign that something's going on in growth. Despite all the comments on how overbought the market is, as well as divergences on major indices, the market keeps moving higher. I'm now up over 1.4 million on one account this year. Now, this is a funny account. I started with 3 million, so on that number, I'm up over 40%. But I took most of that money, 2 million off right away to pay for my house. So I don't know what to figure for my return. So probably up 60 or 70% if you figure it that way. But I'm going to leave the original number because I'm going to start putting that money back when I sell my close on another house that I'm selling. So I'll take that. Frankly, for most years, that's a good year. Twice the Russell, so not such a good year. I will continue to trade the market we have. Seasonality actually is okay this coming week, but with options expiration on the horizon, I'll likely end the week with more cash than I have today and book some more profits. So enough of that. I show this once a quarter. I usually wait to the end of the quarter, but I'm in Vegas, so what the heck. Here's my overall P&L year to date. This here is the net liquid and day trades. If I've made that much and I've got only that much, that meant I took off the difference between 3 million and 700,000, which is 2.3 million, to buy stuff. So that's a pretty good year. I'm happy. I'd like to make more, as all of us would. And I guess my goal is to try and double that the rest of the year. We'll see if that's possible. But I'd share that with you, not to brag, but a lot of people you'll listen to don't even trade real money. A lot of people that are taking trades during the day, I find out, don't even have active accounts. People that used to work with them like to tell on them. And so if I'm telling you or pretending that I kind of know what's going on, then maybe I should share that with you. Now, I will show you a number of stocks, and I forgot to update this list. Import. It's not ready yet. So let me show you how I build this watch list. So in HGSI, I put together a lot of different lists. Included in there is what I call buy watch list. So I'm going to copy these, text column. And then I also have a Word file that I haven't filled up yet. Dummy me, I usually do this before I talk. Here, it's empty. I'm going to dump this list into the Word file or Notepad file, close it. And now I'm going to do import, select file, buy watch. And this is how I'm able to monitor this week 45 stocks to see if there's anything that I want to move into, certainly in the beginning of the week. So I have a lot of different indicators here that mean something to me. This is a cool seasonality indicator from Dr. K. And anything that's got a green 1 over the next 30, 60, 90 days has at least 8% opportunity. You look at something like digital turbines. At 60 days, it's up 12.73% from a seasonality, strong seasonality on live person as well. I think you have to have as many as 8 years in this. I've talked before about how this is a good season for biotech. There's a number of biotech stocks in here. Even Regeneron, which is a laggard in some ways, has got strong seasonality here. So I like to keep in Thinkorswim as well as in TradeStation. I like to keep a list of stocks that I'm interested in so that I can monitor them. But most importantly, I'll stick them in a sonar, which has a number of different indicators that I could follow. Now, when I look at a 4K, I can have all this stuff open up, including earnings dates, so I don't get surprised. So let's quickly look in TradeStation at my major market indexes. Start with the E-minis. So I said divergence. Here's divergence extraordinaire. These red dots are an Alexander Elder indicator. It shows that I should be concerned about MACD divergence. Here is the MACD. Look at the histogram. Here's the higher high, higher high, higher high, yet nothing on the MACD. There's divergence there, and divergence usually ends with a correction. I've got the red dots on the weekly as well. Now, if I back up from there, I will say more bullish. We're within the envelope. We are in a person buy signal right here. We're still in a Laguerre RSI buy signal right there. All three bongos, daily, weekly, and monthly, are positive at 63% on the high jump. Is nothing to worry about. So I see nothing that says this has to come down. But I know with this MACD divergence, it's waiting to. If I look at the Dow futures, they actually turned down with both a person sell on Wednesday, a Laguerre RSI sell on Friday. You can see that arrow right here. Still a weekly bongo green. The weekly and the monthlies are up and they're green, which is good. I look at the Russell sideways move this week, still in a buy weekly and monthly. Blue is sort of a neutral Alexander Elder impulse intake. You can do whatever you want. When it's green, you should be buying or holding. When it's red, you should be shorting or holding. No divergences on this. And then the NASDAQ futures also look good. Buy signal on daily, weekly, monthly, green, green, and blue. 36.75 on the high jump, nothing to worry about. The dollar had a reversal this week, and if we look at it here, we could see a new buy signal came in. So be aware of that. That may impact negatively on some of your metals, and something I'll be watching as well. Let's go look in HGSI. And so because it's not 4K, I'm going to I'll start off big and then I'm going to make it smaller. 4K, I can get a lot more on my screen. So I like to start with major analysis user groups, major markets plus, I hit warehouse, and you can see here, I have 100 and, oops, in this group I have 36. I'm jumping ahead of myself. Now, I like looking at it with a top-down view, and it's set up that the top-down view will rank things where most of the move is for one day, Friday. There's some for a week and just a little bit for 3 weeks. But let's look at a 5-day. Who are the 5-day leaders? ARC Genomic, ARC Innovation, Biotech, Next Generation, FinTech, Russell, NASDAQ. That's a risk-on environment. So something has changed in this market. 1-day move, it was led by natural gas and Bitcoin and lagged by the VIX, gold miners that have strengthened the dollar, gold, and biotech gave up a little bit. So those ARC funds at the top is interesting. We'll look at the IBD 50 in a second. So I'm going to rank them by combo, and you could see that the top-down view, Russell, small, mid, innovation, NASDAQ up at the top. Clearly a growth stock picker's dream. Now let's take a look at some indexes. Let's see if we can find the S&P 500 or the pseudo one. All right. So here's the S&P 500, and let me now open up a weekly. So I have a daily chart and a weekly chart. And you can clearly see on the weekly chart that we had the reversal, bullish engulfing pattern, kind of, at the bottom, and we haven't looked back since. And notice that the John Person weekly indicator fired really early on in this advance. The weekly bongo then followed, and preceding John Person were a number of weekly kahunas. So what's not to love about that picture? The only thing not to love is we've been around this 162% fib retracement. We've just been stumbling, but it looks like we're starting to move. So I look at this and I'm more bullish than bearish, but I also recognize it's been a while since we had a correction and we're getting pretty far from that weekly 50. Let's take a look at the Dow Jones Industrial Average. Pulled back some this week, a new sell signal. Weekly still looks strong, looks like a small pullback and not the end of the rally. Take a look at the Russell using the IWM. Strong as can be, but boy, has this been sideways, but it's broken out above its chandelier stop and looks strong. Look at the weekly. Is it breaking out here? New weekly bongo. Looks interesting. And then the NASDAQ. Again, sideways for such a long time. Is it different this time? Still got to take these highs out. Just looks better. Look at that strong bar closing at the high on Friday. I think the market looks stronger, and we did get a new weekly bongo, which is interesting to me. What else do I like to look at? Let's look at biotech. Biotech has been making me money. I own LABU, and we had an inside day on Friday, so kind of a meaningless day. We broke out from here, mobile breakout and a squeeze, a couple of kahunas in a row, a couple pocket pivots in a row, and then look at the bullish convergence on the relative strength as we went sideways. Relative strength kept getting more positive, leading to this breakout. This is the season of biotech, and I've got a substantial position in LABU. Philadelphia Semiconductors have been breaking out as well. Had their run, broke out, now sideways, so we'll see where they go. Real quickly on the ARCs, now here's the downside of the ARCs. Here is automation, sideways. Here is fintech, sideways between the 50 and the 200. Here's genomic, looks pretty good. It's broken out above the moving averages. Innovation, right below the moving averages. Israel, above the moving average, but right on it. Next generation, still below the 50. So despite the fact they had big moves on the week, they're coming off the bottom, some of that rotation that I showed you. Now, if we go and look at the US dollar, that's not the dollar. This will be the dollar. A reversal on Friday, mobile breakout from the squeeze, a John Person buy, a kahuna, and not to be a broken record, there's bullish and there's bearish divergences. And this, folks, is a bullish divergence on the dollar. So no shocker that it broke out. Out of curiosity, very quickly, I'll look at the spider again. Yeah, you can't see the divergence there, but you could see the market catcher, not really telling me anything. If we look at the VIX, you won't see anything. So I'm going to, because of so many switches, just look here on the weekly, just doing nothing. And then, as I mentioned, with the dollar strength, gold might weaken, and gold didn't do much on Friday, trading below its wilder PSAR. I'd leave it alone until it breaks above it. A pullback to the 50 or at least the 200 is not out of the question. Silver, struggling as well, but still in a good position of the pattern. And then gold miners, sort of stuck between the 17 and the 50 and the 200 area. Next, I look at industry groups. I go down to 07. I hit warehouse view. I've got 174. Let's just look at 2-day up. I've got 74 to the upside. I've got 6 to the downside. Metals, internet, educational, oils, healthcare services, drugs. Some of these are high growth type names, but overwhelmingly to the upside. So let's look at a couple of bullish. Here's my favorite part about HGSI, by far. I don't know any other program that can do what I'm going to do now or the next 5 minutes. I identify the top ranked group by 2-day force, biotech. I right click on my mouse, change to index group. I left click cassava science, and I should have these in the same list here as they are up here. And then very quickly, now let's open up the information window so I can know a little bit about earnings or what the stock does. So this is a preclinical biotech, used to be called Pain Therapeutics, Inc. Had a big run up here on huge volume, has pulled back It looks like it wants to run again. That's interesting. A couple of gap ups. Doesn't have much in the way of earnings. It's under demand. Not my kind of stock because I don't know anything about it. And I've talked about this pattern ad nauseum. I have no trouble buying it. When it broke out here, it's starting to get extended. Heat Biologics, again, another funny pattern. I'm not going to touch it. Kind of a news driven. Novavax, one of the vaccine companies, still not approved. And at some point, I have to wonder, when will these things run their course? And how many vaccines do we need? They're a laggard because they haven't gotten it approved in this country. They do have other therapies as well, and they have revenue. Moderna, the vaccine company, I'm hearing stuff that they may have options for cancer as well coming. Wait till you see their revenue jump. But this reminds me a lot of Gilead and Hep C. They went from nothing to everything. And then when they got competition, their revenue growth stopped and they've languished ever since. So Moderna, I'd rather buy it off the 50 than buy it here, but a leader. And I believe it's a big part of LABU, which is how I play upside. This is healthcare supply chain. Don't know anything about Novan. Had a gigantic move on Friday, high accumulation. It just looks and feels like it's a Reddit stock. Let's see what they say here. I haven't looked this up. Oh, okay, they had positive news. COVID antiviral therapy. Now, hard for me to buy that pattern. It's already had a giant move. Typically, when you see that, they're going to come back down to the 50 and digest. That was it in the group. McKesson, Patterson looks interesting, moving up, makes money, has a 2.8% dividend yield. All right, application software. So I right click, highlighting it, then left click, change the index group. Zoom, it's not dead yet. I'd rather buy it above the 200, but I may have to look at it down here. You had a kahuna. It's in a person buy, mobile breakout, weekly bongo turned green. It's not necessarily going away. It's an important part of a lot of businesses. DocuSign broke out on earnings. Looks like it wants to go higher. Notice it doesn't make money yet. Adobe makes money, nice growth rate, but a really high multiple. See, I mean, I'm still in this thing, and we're kind of back to all-time highs, which is just crazy. I've held this thing through thick and thin, although my cost basis is $35. H had a bunch of buys this weekend. It looks like maybe it's going to go again. The 9, they're now they've announced something about being a Bitcoin miner using green electricity. 3 kahunas in about 6 days I pay attention to. Gap up, mobile breakout from a squeeze, breaking above the 50. It's a cheap stock. I might take a run at it. Obviously, so somebody else with that much demand. Automobiles, NEO. I'm in NEO, and NEO looks like it wants to run again. I was in a Scott synthetic that had gone negative and took out the bottom protected put, and I decided I had another month left in it. I just hold on to it, and then the stock had a run, and now it's very positive. I mean, I sold a call against it. Let's see, here I am. So I have a $40 call long and a $40 put long or short. So I used the put to finance the call. Then I bought a 35 put. So the delta here on my trade price was about $1.80, which reduced the cost of my call from $3.81 to $2. And then I sold a call out here for 58 cents. So I got about $1.50 in this trade. And then the key part here is the one I care most about is the $5.79. So this boring little trade, 50 calls and puts, which was probably less than $2,000 out of my pocket, is currently up 20,650. Now the short put, long put part of the synthetic that I do, that reduces the cost, but it ties up margin. So this looks like it's running again. Tesla, I still say I'd be a buyer, not a seller, but my guess is it's going lower. And if this was to break down, it takes the market with it. Now, I've said it before. I had a Tesla. In the beginning, I loved driving it. Then you get tired of the stark interior. It feels like a fast go-kart. And then if you ever need parts, you want to burn the car. Now you can buy tag cans cheaper than the Plaid, or about the same price as the Plaid. The Mustang from Ford is hot. And look around the marketplace, everybody's got e-vehicles. How do they keep their lead? A PE of 600, yeah, they've got a growth rate there. But one day Tesla's going to fall, and it's going to take the market with it, is my fear. E-commerce discretionary, Amazon. So Jeff, you talk negative about it all the time, yet you still own it. Correct. So here's the problem with Amazon. I've done this, is it over here? That's not on this computer. Here is the problem with Amazon, and I did this not long ago, so I'm just do it again. Amazon lives in a box. It's a big box. It's a 600-point box. You can make money by buying it when it's in the lower third of the box. You can probably make, this is weekly charts going back to June of 2020, a year. You can make money shorting the top of the box. But anything that you buy, you've got to be aware that there's a box here. And until Amazon breaks out of that box, you buy the bottom, you sell the top. You buy the bottom, you sell the top. Now, it's never as easy as it looks. Here's a sell the top, buy the bottom, sell the top, and then it's now going sideways. Buy the bottom, sell the top. Well, we're now in the middle. What's your trade on Amazon? I don't know. Now, I'm going to go back to my portfolio for a second. Here's my Amazon story. I bought Amazon at $450 a share. I bought a lot of it. I'm still in my Amazon. I've taken profits along the way of my Amazon to buy stuff. And now I'm just going to let Amazon, I don't want that. I'm just going to let Amazon run and use it for margin. So if you do the math here, I have 3.3 million of margin dollars, and I've got net equity of 2.1 million. So I'm pretty maxed on margin. I still got some buying power. What I put up against that margin is my Amazon. And the accounting's all screwed up, so they didn't pay attention to that. So I put my Amazon up against my margin account. I buy puts on my Amazon, and those puts keep it so that I don't have to worry about breaking through the bottom. I play options in the box, buy the bottom, sell the top, buy the bottom, sell the top. And I don't worry about what happens to Amazon. I fund all my other trading with the margin I get off this Amazon account. As long as I have my puts in, and my puts I think are at 3,300, I get all that margin because of Amazon. Crazy story, works for me. So Amazon, it had a nice move this week. Am I ready to call victory? No. But could I ride it up to the top? I would have no problem with that. Just be careful. Mercado Libre's a downtrend. Farfetch, interesting buy point sitting on the 200. Now, Netflix looked interesting this week. Let's see how it finished up. Yeah, it's just going sideways. I don't recommend margin unless you know what you're doing. I think Roy said today, you can really blow up your accounts quickly if you trade options and you don't know what you're doing. Well, options are leverage. If you use margin, which is leverage, and then you do things like Scott Synthetics, you are using leverage on leverage on leverage. It gives you great returns when you're right. It kills you when you're wrong. So be careful with margin and be careful with options. Jinx down in its pattern a lot. Couple of pocket pivots, positive divergence there. A new weekly bongo. Don't like the fundies, but that would be interesting if I wanted a renewable energy play. Certainly going to watch it. End phase popped above the 50 and the 200. Couple of pocket pivots. This looks very interesting. Great fundamentals. Entertainment facilities. I'm not even going to look at AMC. I don't play those stocks. I don't know what to tell you. Publishing and broadcasting. My neighbor Kathy, her husband, Kid Kelly's a rock and roll. Oh, it's a rock and roll. He's a Broadcasters Hall of Fame. So they're in the radio business. He doesn't like this name. Sounds like it's a Reddit story, so I won't touch it. But look at the demand and look at this beautiful stair-step move. This looks interesting, and maybe Kathy and I ought to talk about this because looking at the charts, it's very compelling. That was the one that made it to the list. I like something like News Corp Class A, sideways move here, mobile breakout from the squeeze. I thought this looked interesting. Look at the earnings per share growth. Don't know anything about this industry group. Number 9, specialty pharma. Vaxart's got a vaccine. Typical COVID story, pops up, sells off, ends up in the day, but off the highs. And here's some, I have no idea what these companies do. Guardant is a genomic testing company. Zoetis is a pet company. One that's got interesting seasonality right now. And let's look at it. Probably the best seasonality in the market. And let me pull it up. Let's just, sitting on the 50, had a kahuna, mobile breakout and a squeeze. Fundamentals are interesting. Horizon Therapeutics. Now look at this. Edge Radar, as part of its stuff, does seasonality. So does Q, Edge. Q has a tool for seasonality. Sager's like building all these tools to make my life easier. He's going to work on things like the Hindenburg allegedly too. How great is that? I don't get paid for doing what I do here. I do it because it makes me a better trader. And then people who I meet because of this end up changing their software to make it easier for me and help others. I just love it. So what I did here is I took the entire tradable universe and I looked for stocks that were, how many years up, how many years down, going back 20 years, and then their average. And I'm focusing here on the 1-month performance, which is this one here. Then I said, show me those stocks that have 8 up and less than 3 down and what their performance is over the next 1 month. Horizon Therapeutics is up 8 out of 9 years, up an average of 16%. Fortinet's up 11 out of 11, average of 6%. Not gigantic moves here, but pretty strong seasonality. Now let's look what's underneath here. Ultra short Qs are down 9 out of 11 years. If the ultra shorts are down, that means the Qs are up 8%. Ultra short Russells are down 6%, 8 out of 11 years. S&P 500s are down 5%, 8 out of 11 years. Semiconductor bears are down 4%, 8 out of 11 years. Short Dow Pro shares are down 4%, 8 out of 11 years. Triple Qs are up 9 out of 11 years, 8%. So some of them may go away, but maybe the next couple of weeks aren't such a bad period of time. That's a lot of seasonal strength, maybe summer rally is what I'm seeing here. Horizon Therapeutics, 16%, up 8 out of 9 years. Now let's go back and look at the chart. Sideways move. You can set your stop. I didn't plan on saying this. Friday, let's see. High on Thursday was 94.30. The close 93.29. I might set a buy stop at high above 94.30, 94.35. So make it earn my money. I'd set my stop probably about $87. So I'm risking $7.30, which is about 8%. That's a very wide stop. You could also argue setting your stop at 91, just below the 50, and now you're risking 5%. So you can pick your poison on your stop. But if you want to play an interesting seasonality, I might look at Horizon Therapeutics. Chart patterns neutral. Seasonality is strong. Charts trump seasonality. That's my only warning. And then semiconductor devices, NVIDIA, which we talked about a couple weeks ago. Here is the opportunity. We talked about it. Mobile breakout, down to the 200, squeeze, popped up here, bunch of pocket pivots and kahunas. This was the day I got. So NVIDIA, the leader, they go down after that. Intel, no. Semi-LEDs is something I didn't like about this semi-LEDs. I don't know if this, look at the demand. It's a crazy pattern. Those millions or billions. I mean, 1.21 million revenue. It was a small cap. It's still a small cap, $81 million. I can't advocate that kind of a stock. Marvell Technology. I'm looking for anything that looks great. I don't see them. All right. So I go through the top 10 groups during the week every evening, and I look at my scans and TradeStation. I have a master watch list that I put together. And then at the end of the night or end of the day, I want to look at a buy watch list today. So let's just open that up and then maybe highlight a couple that I liked. And let me repeat what this list is. Typically, these are stocks that I don't already own. Why would I, if I've already got a full position, I'm not good at adding to them. If I really like the pattern, I might put it in here. They're typically not $3,000 stocks because even I am not going to buy 10,000 shares of a $3,000 stock. They're not by me right now. They're interesting that I should watch, and if they behave, maybe I'll buy it tomorrow or the next day. So I create the list. You can see the groups that are in the list. I mentioned Skechers when we started the day. Uptrend pullback to the 50 and a breakout here. Kahuna, pocket pivot, person buy, mobile breakout from the squeeze, and a new bongo weekly. I love the pattern. Love the pattern. Good fundamentals. Skechers looks very interesting here. Digital Turbine Apps also has strong seasonality. It's down a lot, but it's crept back up over the 50. I've been in it for a few days already. Philips Van Heusen, let me see, go back up to the top. Let me look at some of these. PVH, another apparel, sitting on the 50. Had a mobile breakdown on Thursday. Friday, a person buying a kahuna, sitting on a good buy point. If I wanted to buy an airline, I might look at Volaris, breaking out off the 50, mobile breakout from a squeeze, person buy, pocket pivot, kahuna. What's not to like, except it's a foreign airline. Momo, if you want to buy something deep in its pattern, broke out this week. Multiple kahunas, pocket pivots, person buy, mobile breakout from a squeeze, probably not too far gone. I believe it broke out on earnings. Far-fetch, awesome buy point, pullback sitting at the 250. Mobile breakout, I definitely let it clear above probably maybe 25 to 50% above the high on Friday, because I don't want to buy a false breakout, a little trap. Veritone, which is a really old name, sitting right below resistance, a break above that would be interesting. XPO Logistics, huge uptrend. Sideways move, they announced some kind of a spin-off, looked at the fundamentals. Mobile breakout from a squeeze, person buy, pocket pivot on Thursday, kahuna on Friday. Taiwan Semiconductor. I've got to see some momentum. This is one where I would call this, I bet it's in my, I have different buy watch lists. I bet I put it in my waiting for signal. Nope, I don't know what I put it in. Ready to run? It's sitting there with a new person buy. I think it's ready to run, but I'd like to see a kahuna or a pocket pivot come in before I would chase it. Canada Goose, break above its chandelier stop. After a mobile breakout from a squeeze, a pocket pivot, kahuna, and a new John person buy signal would be interesting. Then a couple of utilities. Run up on NiSource, sideways move off the 50, 2 kahunas out of 3 days, pocket pivot, person buy coming out of a squeeze, pays a 3.3% dividend. PPL, another similar story, 5.7% dividend. So we looked at the markets. I am hesitatingly bullish, which blows my mind, but that's how I feel, hesitatingly bullish. And I'm going to play the market we got. You all have a great week. I'll do this again next week. Let me know your thoughts on a live meeting. And also, do you like this resolution better? I can get a better mic, but I still prefer 4K, but I'm curious what you think. Have a great week, everybody.